Let's just get to the floor show because it's Friday. Joining me now, Great Hill Capital Chairman Tom Hayes and the Fitzgerald Group Principal Keith Fitzgerald, who said that Costco analysts have got it all wrong. He sees a positive here. First, I'm going to turn to Tom Hayes, though, and get the macro picture as we finish up a week that's had so much news and a few decent records and gains.
Yeah, I think we've had two regime changes in 2 weeks, Liz. So the first was the Fed front-loading 50 basis point cuts, which implies a couple of things are going to happen. We're going to see follow-through with the unmagnificent seven outperforming the magnificent seven. We're going to see continued outperformance of small caps versus large caps. First 12 months after a cut, you get 11% outperformance of small caps, and everyone's loaded into defensives. I think we're going to move back to consumer discretionary over consumer staples. And that second regime change was the fiscal stimulus bazooka. Emerging markets now outperforming developed markets with China on the tear.
Okay, but you say Russell 2000, the small and mid caps. When you say the unmagnificent seven, remind our viewers who's in there.
Yeah, unmagnificent 493 and magnificent 7. So unmagnificent 493 will continue to outperform the magnificent 7, which is Amazon, Google, Meta, etc.
Okay, so you're saying the rest of the S&P is much more magnificent.
It's much more magnificent. It's a sea change that started to take place in the last few weeks and now accelerated with the 50 basis point
Oh, you're
cut.
talking to Keith Fitzgerald, and he's
excited.
been loving and making a lot of money off NVIDIA. Keith, what's your answer there to what Tom's just said?
I think that is just pure genius, the unmagnificent seven, and I love it. I'm going to have to borrow that, with due credit, of course. I think that tech is not all the same, Liz, and so as you know, certain companies are going to do better than others. So Amazon's got its challenges, Meta's got its challenges, but companies like NVIDIA, for example, are going to run right back to the front of the pack. Whether it's the unmagnificent or magnificent remains to be seen, but plenty of party-starting proposition here.
Okay, I got to get your thought on Costco, because while the official earnings season has not yet begun, it begins in a week or so with the big banks. Costco came out with numbers. What are you saying the analysts got wrong that's sending the stock lower?
Well, here's the thing, right? Costco is one of those things, trade the news or trade the reality. And the reality of the situation is I'm not sure they were looking at the same report I was, because I saw sales up, I saw earnings up in the billions of dollars. But the key takeaway here is they didn't even glance at this. 50% of the new memberships that Costco is selling is to under 40 age consumers. That suggests to me there is another group of Costcarati in the blooming that could power this thing for decades to come. The fact that it's down today is purely a technical move and an opportunity.
Tom's going to steal Costcarati, so you guys will be even here. What's your counter to that, Tom? I mean, how do you feel about the U.S. economy? We do obviously see that inflation is moderating, continuing to moderate, although the core year-over-year PCE 2.7, while it matched, it's still hotter than a year ago.
It's Goldilocks. I mean, things look good. The only thing I'm a little worried about, by the way, whenever Keith talks, I listen. Keith is a good buddy of mine, so take a look at those names. The skew, option skew, is the cost to insure 1 and 2 standard deviation corrections is at 10-year highs. So it doesn't mean you're automatically going to get a correction, but, pre-election volatility is pretty typical going back to 1955 in the month of October. So we are staying fully invested, but if you're on margin, I would get off margin. We're going to ride out these bumps, and then once the election clears, we'll get a year-end rally.
Okay, a year-end rally. I'm wondering if that would include, Keith, Intel. Intel, of course, has been at the center of individual stock headlines this week, and at the end of last week, Bloomberg's got a report. The Wall Street Journal's got a report that, private equity might come in, and maybe Qualcomm, maybe who knows what, ARM. But one thing that's been reported is that Intel's pretty much rebuffed a lot of this.
I got to tell you, Pat Gelsinger, I've met him several times, is as bright as they come. He's the right guy at the right time for that company. The problem
is... I mean, he's lagging here. He's been at the helm for a couple of years. We like Pat, too. We like him, too.
I know, but you cannot turn a huge ship on a dime. The problem is the company has missed mobile, missed AI, missed the cloud, missed a lot of things that are a lot of years in the making. So I think, unfortunately, Intel remains dead money. I don't know why they rebuffed these offers, because that could have been salvation. It seems to me that there's a lot of blunt thinking inside their headquarters right now, and it's going to be bad for shareholders.
Okay, well, at least for the week, I see Intel up about 8.7%. Guys, give me your sense next week as we barrel toward what will be the September jobs report. it's really become labor that's at the focus for the Fed. Is it not, Tom?
Yeah, no question about it. I think that's where you could potentially see some volatility. You have obviously the inflation numbers later in the month, but the jobs report is critical. And everyone's pretty happy right now. Sentiment is still mixed. You know, when I looked for things to hedge or short, I found it very difficult to find in the portfolio. The only things that were ready, in my view, that seemed overvalued were utilities and staples, which you don't want to short defensives into a correction. So I think let's see what the labor numbers are. Things look pretty solid. We expect a little bit of bumpiness in October, but again, as long as we get gridlock from that election, Liz, we're going to be fine into year end.
Okay, Keith, we got to go, but Tom said listen to Keith's picks, and I will tell you that had our viewers listened to you a couple of years ago about one particular stock, stay in it, stay in it, stay in it, they would have made a lot of money, and that is Palantir. And we look at some of the gains here. It's quite unbelievable, hitting brand new records. Not unbelievable because you've been here telling us about that. Where does this stock go?
You're very kind to remember that. Thank you. I think we're going to take out 50 pretty quickly. I'm starting to think about 85, but 3 to 5 years from now, there's zero doubt in my mind we're looking at $100 a share. So it's going to be volatile, it's going to be a tough stock to own, but I encourage people to stay with it if you can.
Yeah, big data aggregator. Great to see you both. Have a good weekend, gentlemen. The maker of